What's going on, guys? Austin the Money here. Sorry, it's been a couple weeks. I just moved from North Carolina to Louisiana, so I've been pretty busy with traveling and getting settled in and all that. I'm still not settled in, but let's get into this whole market correction. Will it continue? Are we going to recover? And what does history show us? Because history is a great indicator of how things are going to play out in the long term, not in the short term, but in the long term. So if you get a 10% correction in the market, first of all, that only happens about once every 2 years, maybe a little more frequently, but not every year. It's like a little more than once every other year. That only happens not that much. And if you get a market correction paired with great valuation companies, like Amazon, for example, is trading at a 25-year low evaluation, has not traded this low since the dot-com bubble popped. I mean, that's great buying opportunities, right? I love Amazon. I'm currently in 200 shares at 211. Great company with a great future. It's trading at a 35 PE ratio, which is, like I said, the lowest in 25 years. Now, let's get into this whole market correction, right? You cannot let emotions take over. You must maintain a long-term view of the market, okay? It is in a correction phase right now. Well, actually, I think it's just kind of recovered out of it, but it did hit correction territory. And correction is a 10% drawdown, but no more than 20%. Once you hit 20%, you are considered in a bear market. So only 26% of the years we experience a bear market. 64% see a 10% or worse drawdown. So right now, we are in the 64% of years. That's over half the years. Okay, so this is nothing to be super terrified of or super scared of. I mean, it could get to a bear market, but that just represents more and better buying opportunities. So 64% of the time this happens, right? There's always going to be some news that comes out. There's always going to be some global event that occurs that is going to bring down the stock market 10 to 20% usually. And 94% of the time, we see a pullback of 5%. So 5% pullbacks are very, very common. Even 10% pullbacks are pretty common. So just to let you guys know, bear market, we're in a bear market 26% of the time, and a bull market 74% of the time, if you flip that. All right. And following steep market declines, it usually performs very well after a correction. So let's get to the next chart. I really like this chart a lot. So on the far left, you have the high date, which is where the S&P 500 was at its high, which on the very first one is February 13th, 1980. It was at $118. You go to the low, which was surprisingly only 6 weeks later, and it fell to $98, which was a 17% correction. Okay, then you go look at the 1-year returns and 2-year returns after the low. 33% in the first year, and then another 10% in the second year. So, and this is all the corrections. This is a 3-year-old chart. So for at the bottom for 2022, they have question marks. But as we know, 2022, I'm sorry. So the low was October 2022. So you want to go a year into 2023, S&P gained 24.2%. And then you want to look at 24, the NASDAQ gained 29%, and the S&P surged 23%. So we had a 24% year and a 23% year. Can't expect that to continue. Back at this chart, right? This shows all of the corrections from 1980 to 2022. All of them, including the bear markets. So you look at 2022, this is before we had the examples, right? 2022. See, the one thing I don't like about this chart is it counts. Technically, the 1980 bear market lasted multiple years, but since they recovered to all-time highs and then dipped again, they started it as another correction, which, I mean, technically that is true, but it kind of makes it seem like there's a lot more corrections than there really is. But guys, look, the 1 to 2 year returns after the lows, the only red spaces are the dot-com bubble and the housing crash of 08. That's it. That is it. 1999 to 2000 and the 2007 area. Those are the only ones that lost money. If you're looking at the big picture here, the only two. And that was when we were in a terrible recession in our thing. But even a recession in 2020, the stock market gained 74% out of that COVID drop. You look at the average 1 year is 24.8%. And 2 year is 37.4%. So, I guess the real question is, are you going to be chasing the lows, or are you guys going to, take this as buying opportunities? Because if the lows are very near term, they're very near, then you're going to be having some very nice returns. If the lows are not for another year, then obviously, it would have been more ideal to wait, but you can't predict that. Nobody can predict that. So I'm all about getting into great companies at great evaluations, and I've seen multiple. Google and Amazon specifically are my favorites, and I like SoFi for the growth in the future growth of SoFi as my little fintech play. But this is a great example of the bigger picture, okay? You see a correction, 1 to 2 year returns after are amazing, 25% to 37% in the second year. So don't be scared to invest now, because in the bigger picture of things, you will come out on top. So, and this is not saying go all in right now because we're down 10%. We could very well go down 15, 20, 25, 30%, right? But you definitely don't want to be scared to not invest at all. You definitely want to have something. And in market downturns like this, really small caps are not the play at all. And neither is tech. But some tech companies are in really good buying positions, which are buying positions that I'm comfortable getting into. Because if we start recovering next month, because let's just say some news comes out and Trump's like, oh yeah, we'll just cancel the tariffs altogether. That's the only thing spooking this market right now is tariffs and how it's affecting the economy. All Trump has to do, all he has to do is come out and say that he's not doing it anymore, or something like that, right? He changes his minds a lot and stuff like that. So if he comes out with some crazy news, that right there could literally cancel this whole 10% correction that we've been witnessing, and we could just straight moon back up to the all-time highs. So this is very news-driven. So if we get any other news, then, this very well could change. Another big news on NVIDIA that I've seen today, NVIDIA is partnering with General Motors in Silicon Valley to help them basically, let me read you the exact, using computing chips to train robotic platforms for precision welding and material handling. The goal is to free up GM's workforce in the plant to focus on car making. So NVIDIA is helping build cars now. It's very, very interesting. I don't know how people feel about this. Should they just stay focused on chips? Is this going to make GM pop? Not sure how I feel about this. I mean, it kind of seems like they're just kind of tacking on some extra work, but they are using their robotics, so maybe that will be good for NVIDIA, right? They're going to be selling their robotics to all these car manufacturers, starting with GM most likely, and maybe that could be a good thing for NVIDIA, and possibly a good thing for GM. It sucks for the employees that they're getting replaced by robotics, but unfortunately, that's just the world we live in. So I'm very curious to see how this plays out as well. But yeah, guys, that's it right here. I just look at the big picture. You hit a correction. I mean, anything over 10% down in the market, I mean, you really can't go wrong buying the market right there. You really can't. Over the long term, it's going to be very, very good. So, peace, guys. Appreciate you guys for sticking around. I will be on more frequently. Promise.